Good evening and welcome to Money Matters. My name is Jim Bultler with Videre Wealth Management, and my co-host tonight is Dave DeWitt of DeWitt Capital Management. Hi, David.
Jim, great to see you.
Good to see you again. Well, before we get into a very exciting show with an exciting guest, why don't we talk a little bit about what's been going on in the market recently? Even though we don't want to date ourselves with the timing of the show and when it airs, the summer of 2015 will certainly go down as an interesting time with some turbulence or market volatility.
I would say that's a very good statement.
So why don't we talk a little bit about investor reactions and some potential solutions that we can offer not only to our clients but to our listeners tonight as to how do you react or respond in turbulent times?
Well, it's a good question, and the market has been up and down 2%, a lot during the summer of 2015. And when you get into periods like that high volatility, people start to scratch their head and say, what am I doing? And I think if you take a look at it and you measure the market going up, the market going down, the market going up, market going down, and look at the overall investment landscape, you have to wonder, why is there so much volatility? And for the average investor or even the sophisticated investor, if you have your money allocated and you've looked at where you're putting it, whether it's domestic or international or bonds, and you've got a portfolio like that, it's going to go up and down. I mean, obviously it's going to go up and down every day.
Right.
It's just been doing that a lot more, in the summer of 2015, and I think basically the best thing to do is to ignore it. Because if you try to react to these markets up and downs, trying to time this market is just, I won't say it's impossible, but it's not easy.
Over time, I don't know anyone who's been able to do it successfully.
Yeah.
Any insight as to what may have caused the volatility?
Well, China, was one of the problems with their market, reaching new highs. Government there encouraging margin buying, and then all of a sudden when that collapsed, they decided that the government was going to buy the stocks from the people. And I'm thinking, wow, the government's going to own a lot of stocks, and then they're going to have to figure out a way to get rid of them. But, China has been a long-term growth story, and I think even if there's a hiccup along the way or even a slow period, it's not going to, it really should not affect the U.S. economy that much, because China's basically the countries that serve communist China are emerging countries that provide them with natural resources for the most part, and of course we buy China's stuff, and so it really shouldn't affect the U.S. economy, and our economy in 2015 is actually doing pretty well.
I agree with you. In fact, I've heard that revenue from the Chinese market represents no more than about 2% of revenue of S&P 500 companies.
Right. Oh, is that right? Is that small?
Yeah.
Okay.
And would represent, maybe 1% of our overall GDP, 1% of the GDP, which means exactly what you said.
Yeah.
It represents a small portion, but it has the ripple effect, and it sends uncertainty throughout the global market, and really causing investors to question, what do I do?
Sure.
And so consequently, you get a lot more sellers than buyers at a time when the market comes down like it has.
Yeah. The volatility in the summer of 2015 will probably go down as one of the most up and down type of summers in a long time.
Here's something that I read recently that I think is worth sharing, and that is since 1871, the average bull market has lasted 72 months. So that's 1871. That's a longer time frame than most of us can relate to. The one that we're currently in, if we take it through the end of August, is 79 months old, from March of 2009 to current day, end of August. So they're 79 months. Since 1871, average is 72 months. The S&P has increased about 190%. We've gone up about 200% since March of 2009. However, since 1940, the average bull market has lasted 96 months. So we're like in the 8th inning of an average since 1940 rather. And in that recent time frame, the S&P has gone up 231%. So, perspective. Where's the market going from here? Nobody knows. Long run, we may still have room to run in this bull market, as some would argue. And certainly there's others that would argue, no, this is just the beginning of more selling.
Well, time will tell.
Time will tell. So, do you have time for a question?
I do.
We have a question from a viewer. Jeff Young of Exton, in fact, has written in asking if this is a good time to invest in the housing market.
I think it is a good time to be investing in the housing market.
Okay.
The housing stocks themselves have not reached the peaks they were at before 2008. So there's still room to run if you're looking to buy either a housing stock or if you're looking to buy a house. And therefore, we can see that it's becoming more and more of a seller's market, less and less of a buyer's market. That's a change that's happened over the last few years. And of course, if you're buying a house, the number one thing to think about is location. Is the area in which you're buying, is it an area that's going to grow? Is it an area where people are going to be moving into? Is it an area where the populations are coming in? And if that's the case, location is going to be probably the number one factor. But generally overall, the housing market is improving. I think it will continue to.
Do you think the housing market as an investment is attractive?
In terms of buying a house to invest in, or to buy like a company that builds houses?
I was thinking more the former, a house to invest in, investment property?
I probably think it is. I mean, if you think of the same criteria of where are you buying, is it a growth area, is it going to continue to grow, so you can weather the ups and downs. Of course, when you think about buying a house, you've got to think about repairs and new roofs and all the other things that go along with it. I think I can say from personal experience that owning a house has been an expensive proposition, so you have to be prepared to do all the maintenance and keep the house up. And I think primarily if you're looking to buy a house, you want a house you want to live in, and hopefully it will appreciate.
Right, over time.
Yeah.
Good. Thank you, Dave. Jeff, we hope that answered your question. And if you have a question, this is how you are able to send that to us for an answer.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Our guest tonight is Jim Bannon of Videre International. Jim is CEO, and he's going to fill us in not only with the company, but a little bit about the pharma industry. Welcome, Jim.
Thanks, Jim.
Thanks for coming on.
Nice to see you, Dave. Thank you. Thanks for having me.
So why don't we start with an introduction to who is Videre, and how did you get involved with the company?
Sure. Videre is a pharma services company that is dedicated to evaluating and validating drug safety information, side effects of drugs, and characterizing those so that they can be reported in fulfillment of the manufacturer's requirements to file those reports within 15 working days. They have a very tight timeline. So Videre serves the pharma companies and helps them meet those obligations, collects the information, validates it, and submits it to the FDA.
And your customers can be all the way from big pharma's, Jim, to maybe smaller startups?
Yes. Well, the obligation for pharmacovigilance cuts across all manufacturers, big or small, virtual or the biggest of the big. If you have a product in either drug development or in the marketplace, there's a requirement for drug safety to collect this information. For the smaller companies, that's one of our prime targets. We're trying to get to those companies before they invest in infrastructure to handle this kind of work. And you can imagine that there's a fair amount of investment around safety systems, the actual software system. The number of people required have to be quite technically trained. You need medical background, some healthcare practitioners and the like, to actually handle this information. So you can imagine for a small company that's directing a lot of its money towards the development of new compounds, they don't want to build infrastructure, and they shouldn't build infrastructure. And we can help them, act as their pharmacovigilance department, drug safety department.
Mm-hmm. And what type of work do you do in terms of helping them out? In terms of what are you actually doing?
So when a drug is on the market, we've all had prescriptions filled, and we've all looked at the patient package insert, and there's a list of adverse events on there. If you look carefully, there is an 800 number and a website that if you have an issue or a problem, a significant issue, safety issue, you can call and report that either directly to the FDA, the drug company, or back to your physician. In either case, once the company becomes aware of these kinds of events, they are compelled to collect the information, validate it, make sure that it in fact is medically validated, and submit it to the FDA. Then collect this database, and then at certain periods of time, analyze the data and see whether there's significant trends or there's a new adverse event that hadn't previously been reported. So all those events you see on that patient package insert, that's where they come from, either in the clinical trials or in this pharmacovigilance. That's where, so there's some data behind all of those events.
Are you more involved on the front end before a drug makes it to market, or after it's on the market and in follow-up phase?
That's a great question. The biggest workload is post-approval. Once the drug is on the market, there's generally a flurry of activity, a flurry of reports. People are asking questions. Can this product cause this event? And if there's a patient involved, the specific incidents that can be related to a safety issue, then that becomes an adverse event by the FDA's definition. In the clinical trials, those are relatively small, very directed trials, and it's easier to control the information in that situation. Imagine in clinical development, maybe 3,000 or 4,000 patients who were treated in clinical trials. Drugs on the market, there may be 25 million people treated. If 1% of the patients have a serious adverse event, it's clear that in the post-approval phase there's a lot of work. And that's where we're focused in both areas, help the small company when they're small, but the big companies have trouble predicting and keeping on top of spike workloads.
Do some of the big pharma actually house this discipline themselves and have people, or will they typically farm it out?
In the past, it's been one of these things that they've kept inside. The safety information is so important for them that they fully and completely understand it, that it's been traditionally kept inside, with some small things being outsourced. Over the past, let's say 3 or 4 years, there's been a shift there where there is so much pressure to meet the regulatory requirements, to meet the time frame that's required, that some of these companies have fallen behind and they've built up backlogs, and that's a problem. So we've gone in and helped those companies catch up on that backlog. One point that I didn't bring up, but maybe now is the right time, for these large companies, it doesn't matter where they sell the compound. if they sell it in 140 countries and an event occurs in some far-flung country, that needs to be reported and followed up here. So you can start to see you now have a compound, there's a complexity of geography, and it never goes away. It's there for the entire life of that compound.
What is Videre International?
So the company is, I'm really delighted that I've had a chance to start this company now and focus on providing pharmacovigilance services. I have an outstanding management team. Angela Pittwood is a 20-plus year veteran of pharmacovigilance, working with Pfizer. She's processed, to give you an idea, somewhere around 250 to 300,000 adverse events per year, and
Wow.
had the entire operation to do that. And she's done that in 4 low-cost centers throughout the world. So that is the kind of strength we have at the leadership level. And we have healthcare practitioners, nurses, pharmacists who actually receive the reports, do the validation, complete the required documentation, and then physicians to review the medical aspects of it as well.
So your background is clearly in this area as well, Jim. How
Yes.
long have you personally been involved in pharmacovigilance?
Well, it's an interesting story. I've been involved virtually my entire career. I'm a pharmacist by trade, and one of the first lessons I learned was that every drug that's biologically active has a sharp counter edge that causes the potential for adverse events. So if something does good, it has a potential to do bad. And so it has always been in my mind that this is a really important aspect. When you look at United States, we have 300 million people. Somewhere around 29-30% of people receive more than 5 medications at the same time. If you're over 65, you're 7 times more likely to have a hospital admission due to an adverse event. It's been estimated that somewhere between $3 and $3.5 billion are spent treating adverse events due to drugs. So there's somewhere in the neighborhood of 700,000 ER visits, 120,000 hospital admissions. This is a big expense, a big public health issue. So collecting this information, putting it together, figuring out ways to prevent it, or at least cut the incidence down, would have a big impact on not only the individual's health, but the health of the healthcare system.
Has pharmacovigilance been effective in identifying new adverse events?
Yes, and when you think about, in clinical trials, as I had talked about before, you're talking 3,000 to 4,000 people treated in clinical trials, and yeah, you collect some adverse events. But when you really think about it, based on good clinical research standards, you want to eliminate confounding variables so that you can detect whether the drug has the intended result. And so you're picking patients who are in a very narrow, tightly defined definition of disease. You exclude the patients on concurrent meds or have concomitant disease. And so what you end up with is 3,000, 4,000, or 5,000 homogeneous patients in a very narrow group, but it helps prove the fact that it works and is relatively safe. Now it gets on the market. All those patients that were excluded, all those people we were just talking about on 5 medications, suddenly those patients are receiving this new medication under situations that have not been studied before. And who knows if it's extrapolatable, the safety data to them. So the FDA recognizes that. Rather than wait until we know everything about a drug, the FDA has said, well, let the drug go on the market, but it's incumbent upon the manufacturer to collect this information forever.
So when someone calls the 800 number, are they calling your company?
They could be. They could be calling our company. The 800 number comes into a central database. That's the way we have it set up. They come in centrally. And there's a triage set up to identify what the patient or person, it could be a healthcare practitioner or pharmacist, what the issue is. Are they reporting an event? Do they want more information? Or do they have a manufacturing issue? Those are generally the 3 big categories. And then we handle it from there. If it's adverse events, then it goes down the cascade we've been talking about.
With the money you were talking about before in the industry, would certainly suggest that there's competition. Who would you regard as some of your major competition at Videre?
Well, it's interesting. As we had talked about before, this has been something kept close to the vest for these pharma companies. So in a way, the number one competitor is our client company. They're doing most of this work themselves, and we're wrestling. We're arm wrestling over this work. It's saying, let us do it for you. We can be more efficient and we can focus on it. But there are competitors, and I used to be the group president at Covance. We did pharmacovigilance. I did it for 30 years there, but it was always in the context of clinical trials.
Okay.
And there has been some migration into the post-approval area from that. So the major CROs, the Quintels of the world, the Covances of the world, do it, but it's on a base of drug safety in the clinical trials area.
What's a CRO?
CRO is a contract research organization.
Okay.
That is much like my company, but focused on doing clinical trials for the pharma companies.
It's, to me, when there are adverse events once the drug has been marketed, what percentage of those adverse events are due to drug interaction?
I don't know what the percentage is. It depends on the drug. Some drugs actively stimulate enzymes in your liver, and that causes a problem with other drugs. So there's clear interactions there. There's other drugs that bump drugs off of albumin and binders and the like. And so you can almost predict those adverse events that are likely to come from those. And generally the scientists anticipate many of those ahead of time.
Right.
There are others where that has not happened. There's been changes in heart rhythm, where it's been associated with both either drug interactions or specific drugs that prolong the intervals in your heart rate. Mm-hmm. And so you don't know what you're going to find. The biology of how the product works should point you in a direction that begins to, shape where you should look in the rest, but you're never quite sure. And so you really have to follow up on all events.
How do you find the FDA to work with? Friendly, unfriendly, or somewhere in between?
Well, I consider the FDA our friends. And the reason I consider our friends is new regulations create business opportunities, and I'm on the business side, so I get to benefit from it. The FDA is, generally when the FDA is quite clear on what they expect, they're easy to work with. You'll hear people say they have trouble with the FDA. It's when they are unclear about the requirements, or they haven't quite they issue guidances where they say, this is how we're thinking about this, and we're formulating it. And they allow the industry in general to help formulate those. But, if you comply with the FDA, and the FDA has a kind of a simple approach, particularly in this business. If it's not documented, you didn't do it. And so, document.
Right.
That's kind of true in a lot of businesses, I believe.
would think so.
So, you mentioned earlier the types of employees that you have. Are these people that work dedicated to your company?
Yes. So we are all about healthcare practitioners. The quality of the people, we're dealing with rather sensitive information, medically oriented information, and we really don't want to go back over and redo work or do the work partially and then recapture other work along the way. So we want to do it right the first time. And so healthcare practitioners help us accomplish that. But more than just being a nurse or a pharmacist and carrying that card, we want people who can apply that knowledge to pharmacovigilance and understand the requirements, what we're looking for, can ask the right questions, and can deal with others. And so we have done that to focus on high quality people.
Mm. When did you start the company?
We started the company about 2.5 years ago.
Oh, okay.
About 2.5 years ago.
So I have a question along those lines. Given the not only the discovery, the clinical trial part of what we have been talking about, the post-approval process, what do you see the future for drug development, new discoveries, and how Videre fits into that.
Yeah, it's interesting. The FDA for years reviewed and approved about 25 to 30 new drugs a year. And there's been changes in the regulations that have helped stimulate that. The industry wants to have more drugs approved. They want faster review times and faster turnaround times and the like. They're beginning to see that happen. There's some fees that have been transferred in that process when you file for a new drug application that helps support the costs that are needed for FDA to review that. And so things are moving rather quickly. So, for instance, last year 50 new drugs were approved. So I think that helps a lot. I really think that the more drugs that come onto the market, I think that the marketplace for, if you look at medicine in general, the number of prescriptions written is relatively flat for the last half a dozen years or so, maybe growing 1 or 2%. The real growth is outside of this country, in other markets, and people are looking at the developing countries to really start to stimulate the bigger growth in the pharma markets. And I think in that instance, it'll create a lot more work, a big burden up front in those developing areas. And we want to be ready to do that. We want to be a global provider.
If someone were interested in learning more, how would they get in contact with you?
They can reach me by email, james.bannon@videre.com, and be glad to talk to anybody about it.
Yeah, it's an interesting area that, recently, I think the FDA put more strong warnings on things like ibuprofen.
Yes. They've been really, there has been an enhanced, if you will, scrutiny from a safety point of view on drugs. And I think that the population in general expects the FDA to protect them from unsafe medications. And so there's been a lot of pressure, and I think they're trying to respond to that with increased scrutiny. And
well,
so
what's interesting is that you mentioned that the growth, there's more growth outside our borders, and to some extent, the FDA's hands are probably tied when it moves, across the border.
It's a little bit tied a little bit. There's some cooperation with other regulatory agencies where they share information. It gets a little muddy whether the same report was filed twice, was filed in X country and then here. So they want to make sure that they can sift and sort that data. But a lot of people are relying on the FDA and the EMA in Europe to be responsible for the European Medicines Agency.
We're probably down to about a minute left in time, but what percentage of your business is domestic versus international?
Right now, it's primarily domestic. It's primarily domestic. We expect to see a shift in that pretty dramatically. The biggest areas right now, of course, the United States. 70% of the prescriptions written in the world are in the United States. So, by definition, most of the work is going to be here. So
that's a pretty high percentage.
Sure is. It's a lot of money, too.
So the third that's outside is spread around to a lot of countries. In the European Union, they've worked together there, and that's the second most powerful regulatory body. And so those two areas are the areas that I think need to be covered most. And then the Asian market, China, etc., will be coming along.
Jim, thank you. Very educational, very insightful. We'll be looking to the future for your company's guidance. Thank you for tuning in. Our guest next week will be Martin Feller of Investment Solutions. And in the meantime, again, thank you for tuning in, and your money matters.
Very good. Thank you.
That's good, right?